Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Where we take a look at these markets, and we do it from a neoclassical perspective. Each time, we ask ourselves just one question: what happened today? What does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube. It's available to you there. It's under the channel L.A. Little, so you can check it out, subscribe. Anytime we push content, you get notification of it. As far as these markets and what did happen today, let's take a look at that. It was pretty much an exact reversal of what had happened last week, which was everything goes up today. Last week everything went down all week long until we got to Friday, started to stabilize, and then today, well, now we're going to go back the other way. We got big gains across the board here. 1.5, anywhere from 1.5% to about 1%. What I would notice is that the NASDAQ and the NDX were the laggards compared to the Dow, which was the leader at 1.5, 1.4 here on the Russell. So big up day. Takes back some of those losses from last week. If you look elsewhere, dollars up, gold's down, commodities in general down, other than oil got a little bit of push up. But pretty much, dollar strength leads to commodity weakness. If the dollar strength gets outside of the boundaries, then it leads to equity weakness. In most cases, that's been the way it's played out. So, overall, big day up, and here we go again, tracking back the other way. Let's start with the Dow Jones, since the Dow Jones was up the most. And I want to remind you that these percentage moves we're seeing, they amount to a fairly good percent, coming in around anywhere from 2.5 to about 5% on these moves, back and forth. And so this has been the story. You're getting 2.5, 3% moves, 4% moves. This one was almost 4.5. This one's probably about 3. You got about 2.5 back up. Now you get 2.5 down. Now you're coming back the other way, right? These gyrations have ended up being, anywhere from 2.5, 3, 3.5%. And then in particular, this one, you've actually put two of them together, ended up with about a 5.5, 6% move overall. But in general, these moves last about a week, move about 2.5, 3%, and we're doing the same thing again starting out this particular week. It's the end of the month, end of the quarter. That typically is a good time for stocks. You also got April coming up, which also seasonally is a strong time for stocks. But it's not as if people are just pouring in here. I mean, that's not what we're seeing, isn't what we've seen. Matter of fact, there's only one big day, that was quad witching. Everything else is pretty much, I don't really care. Right? That's kind of the way this market trades right now. I don't really care. There's nothing that makes me want to just dive in here. And there's nothing that makes me want to just sell it all out. I mean, even the down days, for the most part, you get no escalation of size in the volume. It's kind of whatever it wants to do, we'll just kind of hang in here and wait. It's complacency at its best is what it really is, and it continues across all these indexes. Here's the S&P 500, nice move up today. Volume actually declines. If we move over and look at the NASDAQ composites, you gap up, you got a little bit more volume, you're coming back into the big downdraft bar. Resistance up a little bit higher, the thing can carry some more. It's the same story we've seen over and over, where you sell it off and then you buy it back. And it's like programs just keep moving this thing around and nothing else is happening. The only one that's going to get interesting again quickly looks like it's going to be the Russell. The Russell's going to come back up and test, or at least it wants to come back up and test that breakdown off the top. That's going to be the key test, is right up here, right? What does it do when it gets there? It's not that far away. So the Russell, if it gets up into that tomorrow, the next day, that's going to be the key test. What do you do when you get up there? The quad witching actually, I believe, actually has the high that didn't get tested. No, it's not. It was a bar before. So quad witching got tested twice. You get the big breakdown off of it. Now you're trying to come back up and test it again. Folks, when you get pullbacks like this, the test always is, what do you do when you get back up there? And if you look at some of the prior ones over here, and let's just take this one, right? Here's a nice breakdown bar off the top. You come back up, you test it, get over it, and even though you come back and test into it here, that was that bar that led to the larger move to the upside. So again, if this thing can trade up and over, then come back in, that's kind of the ABCD structure you kind of love to see, right? That potentially can push these things higher. They still have ABCD structures to the upside, although they've been beaten to death. You know, it's taken them forever. Actually, this one doesn't, but on a weekly it does. It actually has one here on a weekly, right? So that takes it up beyond where we've been so far, about 2% of beyond those highs. So I guess if it gets up there and gets over them and runs up to it, you know, we'd finally finish off these labored ABCD structures. But in general, you know, today's just a bounce day. It's a dead cat bounce type move. No volume escalation for the most part. So what? We're going up, right? And we'll see what it does when it gets back up towards the top. The Russell is the one to watch if you're looking at the indexes. I'll come right back and we'll talk about some of the sectors and more about the markets.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Okay, folks, as we come back here, you know, the question is what drove this market? Last week, all we did was sell. What was different about today? Well, the first thing you can turn to is China. I mean, China is a big piece of what's happening. I've got this on a monthly chart here, so you're looking at 1 month time frames. But if you look at this, I mean, this is a huge ABCD structure up on this time frame. It's over the highs from back here, right, from way back in 2010. China is up. It's up big. It's making a big move. And it continues to make that move and did again last night as a result of what was said by the Chinese officials, basically telling us, hey, we're going to do whatever we have to do, cut interest rates, cut bank reserve requirements. We're going to fight deflationary risk. That was the words that came out of the PBOC, the Bank of China, and they also did move forward on some other issues, like they took the down payment requirements for second homes. They lowered those. They got rid of some tax if you held the house for 2 years or more, etc., etc. Right? Prop up the housing market. Prop up the stock market. It's central banks. It's central banks at their best. China continues to be a big piece of what's going on. And the other thing that's happening is not China, but it's over in our markets. And it's deals, right? It's M&A. We saw M&A activity today in the biotech sector again. United Healthcare coming after Catamaran. CTRX is the thing. Teva was going after a pharmaceutical company. Horizontal Pharma was acquiring a Hyperion. A lot of deals announced in the biotech sector. And when I come and look at that biotech sector, I don't see that much enthusiasm. You just had a big spike down, 10+%. You're getting the dead cats bounce back up into resistance. Folks, this doesn't look like a healthy market to me despite those deals. Central banks, yeah, central banks can move the markets and they continue to move the markets. But when I look at this sector, I wonder to myself, okay, is that really telling me something good? And honestly, it doesn't look like it is. ITB, which is the home construction, going back up to test that top 28.22, got up to 28.36, closes at 26, it gets over, it breaks over. Tomorrow we'll see if it gets follow through, has another ABCD structure. This is one part of the market that surprisingly continues to do well. And and I say that because back here when they did earnings, they got plastered. Well, earnings are coming up again. I wonder how they're going to fare when that actually hits the tape. Let's pop through some more of these. IYT, we talked about this last night. It was testing lows, getting his bounce, coming into resistance, probably going to turn around, head back the other way. If we look at the stocks, now the chips were struggling a little bit this morning despite everybody else pushing higher, but the chips kind of got it going, got a nice little push up. They're pushing back up. They're going to try to get up to their breakdown bar themselves. If I look at the big bounces, large percentages, here's 1.36% basic materials. Looks like a dead cat bounce. If I go to the energy sector, which has been kind of a tough one, got a nice big push up to 2.15% today, pushing up into resistance. It's hard to get excited about what I'm seeing in the sectors. They're just dead cat type bounces, and as we flip through them here, you can see, in most cases, no volume. Big move in price, no volume. That's usually not, the great sign you're looking for to tell you, hey, people are excited. They're throwing everything into this. They want to take it higher. XLP, yeah, that one got a nice bounce today. And that was one that was in danger of, breaking on multiple time frames. So if I had to pick one today, that would be a nice one, 1.7% higher. XLU, not much there. Let's go to the XLV. And let me see, XL, let me grab the right chart here. And here on the XLV, you can see a little spike up, no volume. This is despite the deals, right? Same sort of scenario, coming back up to the breakdown bar. The key this week, if this market really wants to go higher and really wants to get over the highs and push higher, the key is going to be the same sort of thing we've talked about before ad nauseum over the last 4 or 5 months. And that is what do they do when they get to the highs? Can they get back over them? What do they do when they get to the breakdown bars? And in the case of these markets, it's really the breakdown bars. Let's just pick on the XLV again. Top of that bar, 74.62. You trade up to 74, 73.78, almost 74. Can you get over it? If you can't get over it, right, that's a failed bounce. And what does that do? In all these cases, a failed bounce would simply be an ABCD structure to the downside. Nothing huge, but a failure structure, not a success structure, like we've had here and elsewhere, right? And all of these have come up short, as a matter of fact, for the most part. So that's where those sectors lie. That's how they look. The story today really wasn't the U.S. market. It was China. It was central bank intervention. It was the same thing we've seen over and over. We saw it in China. We saw it play out again in Europe as a result of that. And, we've got a lot of data coming on. Economics are not what is driving these markets. It's central banks, pure and simple. At some point, the markets are not going to believe the central banks. But so far, so good. They keep believing them. They keep buying them. Matter of fact, I don't even think the markets want the economics to get good. Because if they did, they'd have a problem. And so they would prefer these markets to keep sucking air because the central bankers will prop them up. And that's kind of where we stand. I'll come back in a second. We'll do the last thoughts here for tonight. So as we wrap up the show tonight here, the issue in this market is pure and simple earnings and economic. Now, earnings have been talked about over and over and over. I don't hear that much about the economics. But if we come in and look at the economic calendar and we just pop into, one of them that came out today, yeah, there's some good spots, pending home sales, we can pop into that one. These showed up better than expected. But there's so many of these that are not. For example, the one that was caught my eye today was the Dallas Fed. Now, the Dallas Fed, the numbers here reflect, of course, the oil bust that has taken place because, West Texas, a lot of Texas actually, is about oil. And there's been huge layoffs, huge job loss as a result of it, and that ripples through the economy. I read a piece not all that long ago, 6, 8 months ago, that Texas accounted for the majority of the hiring over the past 6 years. Texas is a big state, a lot going on there, but the majority of the hiring, think about that. One state out of 50, the majority of the hiring, and I don't know what the actual numbers were, but they were that. But now look at it. They expected it to be down 11%. Well, it was down 17%. These kinds of numbers we've seen over and over and over for 7, 8, probably 8 months at least now. These numbers have to get better. If these numbers do not get better, I don't care what the central banks say, they're not going to be able to raise interest rates. They keep talking about raising rates. I don't see how you can raise rates if the economy isn't pumped up and running. And right now it's not. And furthermore, I'm not sure how you raise rates if the dollar keeps going higher and higher and higher, because dollar strength, at least in the current environment, dollar strength is not a good thing. Well, it's not a good thing for the equity markets, but it's not a good thing for world economics, right? For the relationship between us and the rest of the world. A stronger dollar creates a lot of pressure on other countries. And there's in these dollar, if you, and I'm gonna pull it up here, this dollar, if you look at it, this thing has been on a run, and I don't think it's done. Here's a monthly chart. Test the swing point high, right? Gets over it. Well, it got over our previous one. Now it's up here testing. This one wants to get over it. This dollar is going to be an issue, and if you raise interest rates, it's going to be more of an issue. China warned today about the dollar being an issue. World, everybody wants us, everybody, and I'm saying the rest of the central banks, want us to forget this talk of raising rates, just like they wanted Britain to forget it. Britain did. Are we going to be the next one? I suspect we will. I don't know how we're going to raise rates. There may be one token rate hike. I can't see anymore. Because as soon as they do it, and as soon as the perception is that we're going to do more, that dollar is going to take off, and it's going to pressure the Fed to back down. So we'll see how that plays out, but I don't see how it's going to happen personally. So there's enough issues here to make this easy money policy go forever until it can't. And when it can't, it will be a result of the fact that people are going to see a recession of which we have no answers for. Conventional stuff is out the window. The only thing you can do is unconventional, which means if you're going to fight a recession now, you've got to print even more money. Folks, at some point, that is going to be a problem, and it's going to be a big one when it finally hits. Hey, have yourself a great night. Thanks for joining me. As far as tomorrow, what I expect is I expect a little bit more up. Well, I shouldn't say that. I don't think today really told us anything. What I want to do is I just want to see the test on that Russell as the Russell works its way back up and tries to test that breakdown bar. That's going to be the real litmus test this week. If it can, A, if it can get there, and B, what does it do when it does? Have yourself a great night. I'll see you tomorrow. Take care. Good night, folks.